Hey traders, John Howell here. Today we're going to be looking at the overall stock market, S&P 500, the Nasdaq, the Dow. What are they telling us about what's happening right now when it comes to those indices? Also going to be looking at silver, gold, and the mining stocks. They continue to get a lot of weakness in there. And it just doesn't seem like you guys that are long-term investing into the mining sector are getting a break. But I'm going to show you exactly what I'm seeing through there. And I've got a few other things that I've written down on my handy dandy workbook or notebook here that I want to share with you that I believe it's going to help you in your trading. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, I wanted to say thank you. I have just recently passed 30,000 subscribers. Man, that's taken a while. I've been doing these videos now since 2008, I think it was my very first video, and now I've just passed 30,000 subscribers. So what I'm doing right now as a way of saying thank you is that for the very first 50 people, I'm going to be building your very own custom trading plan for free. That's right, for the very first 50 people only. Very first thing in the description, click on that, go over, register, complete all the details, book a call with me, and I'm going to build your personal custom trading plan for you that will help you make more progress in the next 3 months than you have in the last 3 years, period. All right, so go to that right now. Very first thing in the description, very first 50 people, get that. Now, let's have a look at what's happening with the good old stocking market. The first thing I do say, guys, is when it comes to right now, we are in a very emotional period of time in these markets. And so it's really important, guys, to stay calm. If you're getting emotional about your trading right now, you really need to pull back a bit because the market's always going to be here, right? And that tendency of wanting to trade, even if you do trade and you do get into a position that you know you shouldn't be in, guess what? Just get out, right? You can always re-enter later. Always think about the worst case scenario, not just the best case scenario in any position that you're in right now. Okay, because even I do it, right, guys? I'm not perfect, you know what I mean? It's like, oh man, that's the wrong thing I did there, right? So I've learned over time that what we always do is like, oh man, this thing's going to the moon. But what if it doesn't? Well, it's not going to, and then we create this reason, this story of why this thing is going to not do the thing that we don't want it to do, and it's definitely going to do what the thing we want it to do, right? And so what do? We look for confirmation bias. We watch YouTube videos. You might be watching my YouTube video right now to get some confirmation that you being long the mining sector right now is the right thing to do. Is it? I don't know. I don't know if it's right for you or not, right? We all at different situations, different times. We all have different emotional understandings of longer term and shorter term time frames, okay? And the swings that the market is going to give you. And so, it's like, are you looking for confirmation bias in your particular trading? And guess what, guys? The number one thing I must say is this. If your position in the market, what you're doing right now, if it goes completely wrong to the worst case scenario, are you still okay to fight another day? The worst thing I've done over my last 17 years of experience, I haven't done now for probably 10 plus years now, but my first 7 years anyway, 5 years anyway, was me not thinking about, if I blew up my trading account, it's like, I wasn't thinking about the worst case scenario, right? It was me loading up on big positions and me not thinking about the worst case scenario. And not worst case scenarios in like, if this trade goes completely belly up, am I still going to be okay? Am I still going to live to fight another day, right? The worst thing we can do is completely YOLO like all our money into one position. And as you know, whether you're a trader or investor, no successful trader or investor does that. They never YOLO in the markets. Make sense? So please be looking, when you're in the markets, ask yourself, am I following some sort of a plan? Again, very first thing in the description below, if you don't even have a trading plan, I'll build one for you and I'll show you exactly where you're going wrong, what you need to focus on, and what you need to do to move forward, right? So again, very first thing in the description there. But it's like, are you following something that has a good sort of win-loss ratio, good success rate. So let's actually go on through here when it comes to the stock market. And let's look at the Nasdaq. Actually, let's start with the S&P 500. Actually, no, let's go to the Nasdaq. Actually, no, let's. I'm joking, guys. Actually, no, let's look at the diamonds first. Monday morning for me, guys, and I'm really excited for this week. I'm really excited for the rest of this year. I've got some comments in the comment section below saying they're going great. Trading is amazing, guys. One of the biggest things about trading being amazing is I know if my whole world, if my positions go completely belly up, like completely the wrong way, I am still good to go. So that's where I'm really, really, really excited. And I know the positions that are just, oh my goodness, guys, it's just the setups that I trade is just absolutely just incredible. Anyway. So looking at the Nasdaq looks like it could be forming some sort of a head and shoulder formation right now. The interesting thing about the Nasdaq is that we're forming a shoulder, a head, and a shoulder formation. Now, the interesting thing about a head and shoulder formation in a big booming bull market is most of the time a head and shoulder formation does not produce the follow through of that formation. It's more like a continuation. I don't know about you guys. I don't know how long you've been trading for, but if you've read the textbooks, they say, "Oh, look, here's a head and shoulder formation, and we should start to see some follow through." Now, yes, that does happen, but one thing I've noticed more times than not is that the head and shoulder is just a fake out, and then suddenly we continue in the direction of the trend that was. So, for example, here. If we have a look here, right, with the trend of the direction before the head and shoulders was up, then we make the head and shoulders. There's actually a high probability that this thing is probably going to be a head fake, and then we see an upward move. But I'll let the market tell me that, right? I don't know yet. We need to see probably a breaking above this sort of high through here would be a breaking for me to say, okay, we're now likely to see a move to the upside looking at that level. But that's that key level that I'm watching to see on the Nasdaq, because we are starting to make a lower low and a lower high. So we are starting to see a downward trend, and it's really an interesting situation where we are right now. It's like, it's a do or die situation really. Like, are we going to continue down? And maybe the head and shoulder formation is actually going to reverse this market somewhat on a short-term basis. Again, guys, I don't believe we are going to see a complete crash of a 50%. We may see a correction of 10%, and then guess what? Woof, inflation or reflation of assets. The Fed do the thing, right? Right? They do the whole thing. So we can see what's going on here is that's what we're seeing through there. So it's a really, where are we right now in the markets? Same for the S&P 500, right? We're doing the same sort of thing. We've got a shoulder, we've got a head, we've got a lower high, and now we're actually breaking down. Even though we've got a bit of a reversal day last week, it's like, what's this market going to do? Are we going to break this low here? So there's two main levels that I'm watching for on the S&P 500 to see, okay, what's really going on here, okay? Because it's like, okay, what is the market going to do? Are we going to break this 4,300 level? That's that line in the sand. If we do break that level, then yes, we're probably going to see a bit more of a follow through on the downside. But if this is just one of those continuation head and shoulder formations where the market rallies up, we create the shoulder, we have the head, we have the shoulder, and then it just does that on you, right? So it's a shoulder, head, shoulder. If this is going to be one of those things, we would need to see a close back above this 4,450 level. So this whole area through here is like big question mark, big question mark in the markets to see where we are right now when it comes to the S&P 500. Now, one thing I definitely do want to share with you that I've been watching for the last few days, I've been really keeping an eye on this, and that is this fear and greed index here. And as you guys know, for the markets, you want to invest when people are fearful, and you want to be in the markets when you want to be out of the markets when people are greedy, right? So look at this here. So if I have a look at this, where we are right now in the fear and greed index, we can see that, okay, we have the where we are right now. We're getting into the fear, right? Extreme fear was actually previous close was, it's okay. So it went from extreme fear previous close to where we are right now to just fear. We're on the 27 level. Junk bonds is giving us an extreme greed reading. Neutral for the volatility, extreme fear, extreme fear, extreme fear. So we're out of all the indicators, we have 1, 2, 3, 4, 5, 6, 7. So out of all the indicators, out of 7 indicators, we have 1, 2, 3, 4, 5 given this extreme fear reading. And as you can see where we're looking at right now, you can see these major different boundaries, right? These major different ranges of what I look out for in these markets. Now, if we do see a correction, guess what, guys? We buy when people are greedy, buy when people are fearful, and sell when people are greedy. And so if we're looking at this here, if we do see that correction, guess what? It's going to be a buying opportunity for the big boys. The big boys are going to scoop this thing up like there's no tomorrow. Fed come out, boom, right? They do the whole thing, and reflation, right? The reflation of the assets. If you haven't put one on one together yet, every time they print money in the past, what happens to asset prices? Especially when they keep interest rates low, right? So you can see back down here when we got below the 20 level, it wasn't exactly you never know the exact bottom, but you know, okay, within the next couple of weeks, we should be getting very, 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 very close to that level. And especially when we get to like, if we get close, as soon as we get very, 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 very close to like this 0 line where you're like absolutely maximum fear, guess what? Look at that. They're pretty much layups. You know what I mean? Like, look at this here. 5 things. Do you want news summary each morning? Get 5 things directed to your inbox. No thanks. It's a squirrel. Look at this here, guys. So this is why I love looking at this indicator, right? Because it gives me a good, okay, where are we? A lot of people fearful, and where are we in these ranges? So you can see here, look at this here. We got almost down to the 0 range, which is absolutely maximum fear. Last time we got down to there was where? Right there. So if we did get that sell-off coming, if the market does break down and we do get that sell-off, watch for this. Why? Because as soon as we're getting very, 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 very close to the 0 mark, where it's like absolutely maximum extreme fear, when people are fearful, be greedy. I wonder what's going to happen to the markets at that time. You know, the market's just going to keep going down, right? Especially when we get close to there. Now, it's not always the exact bottom, but it just gives you a good gauge on what's going on in the markets, right? And as you can see, same for the upside as well too. As soon as we get into the 95 range, 95 and above range, guess what? Extreme greed. That's where the warning signs are going to be when it comes to the markets there. And so these, they're the boundaries you want to watch out for. Now, this bull market right now will end with this fear and greed index being back above 90 again. It will. Just no doubt about that. That's over the next 6 months, 12 months more, right? Like, I don't know when that's going to happen. I'm very, very confident we're going to see just a completely melt up phase. I'm very, very, very confident in that. And so I am looking for, that to happen. And so we can see that, we can see, let me just do this here for a minute. I was just testing my audio. It's like, is my audio working or what? So anyway, so we have these ranges here, right? So if we do get a correction, 1, just expect that it may happen. 2, be calm, because 3, we know it's going to be a reflationary time, and then we're going to see one of the greatest melt up phases we have ever seen. Like, you think 1999 was big. You think the roaring 20s, go back to the roaring 20s chart, right, was big. You ain't seeing nothing yet. In fact, let's actually do this here. Let's actually go to Dow Jones 100 years worth of data. Back here, right? Look at this back here. This is 100 years of the good old data. It's actually probably a bit more than 100 years, but look at this here. See this? See from there to there, look at that big melt up phase. We did what? We did 500% return in about 8 years. It actually really did. Once it actually broke the previous high, you can see we actually did a pretty big move over the last 4 to 5 years of a big move up. So I'm probably expecting something like that in the markets, a big just whoosh, right, move to the upside, and then we had a crash, right, and then we've done our thing there. You can see how we just did nothing there for a while. But look at this here, right? We say, oh, the longest bull market in history. The longest bull market in history. Okay, but if I look at this big time frame, I say, okay, the bull market started here, and then it ended here. That's actually 23.8 years where the bull market just continued up overall, right? Yeah, we had our periods and years going sideways and a little slight pullback. But if you look at the overall bull market, this thing lasted 23 years. Then this next bull market from here to here, guess what? Lasted what? 17 years. So, hang on a minute. If I'm looking at this correctly, people are, oh, the biggest bull market, the market's overstretched, the market's over, right? They do their talking head thing, right? Right? And suddenly we have, where are we right now? From this low point to this high point, we're only 12 years into this. So, from this low point here to this high point here was 23 years going on 800% return. This one here, from this one here, this point here was going on, this one here was 1,000% return. All right, went up over 1,000% over a 17-year period. Right now, we've gone up what? We've only gone up 350% over the last 12 years. So there's nothing stopping this from a historical perspective to say we're ready to go for this move. Because if you actually look at this here, it's actually, look at this here, sideways for a long time, sideways for a long time, sideways for a long time. And what happens after these long times? We go through these astronomical bull market moves. This one here, call it 20 plus years. This one here was a few years shy of 20 years. So if we're looking at a 15 to 17 year on this one here, or 17 years, this one here, 20 years, this one here. As you can see, right, we can see that that's what's happening. Now, if I do it from the actual breakout, so this here was the breakout there to there, you can see, okay, so this, when the market started breaking above this high, from there to there, we had what? We had 450% and also 17 years in the markets. Same from there to there, market broke out. So you can look at that. That's actually roughly 17 years of the break. What I mean by that is that the market went sideways. As of the break here, roughly 17 years up, we went. As of the break here, roughly 17 years up, 16, 17 years up, we went to the upside. So think about that on a big picture perspective. So many people get so sucked in, right, into the mix of what's going on right now, right? What's going on right now? And they just think that the market's going to crash, the market's going to be all over. But we still could have, because we're only like what? If we're looking at from this point from there to there, we're at 12 years, 12, 13 years. So we've still got another 4 or 5 years of the making, right? So that's the big picture. Small picture, yes, what? We can see a 15% correction. And then guess what? Woof, away we go again. So please be calm about what's happening with these markets. Let's go have a look at the good old silver and gold. Oh, what happened through there? There we go. So let's have a look at the good old gold market here, guys. And I tell you what, it's actually interesting. A lot of people that I actually do speak to on the phone. And again, if you want me to actually help you with your trading, with building out your custom trading plan, finding out where you're going wrong, what you need to start doing to move forward, and actually start to build out a bit of a plan for you. First link in the description. Go do that right now, guys, and I look forward to speaking to you on the phone real soon. So, we can see here that what's happening here with gold is now we are just. It's been people that have been investing in gold for the last year have just been. I understand it, right? I understand it because my thinking brain, which I know there's not much up there anyway. It's like maybe 2 brain cells, right? My thinking brain says, okay, we're probably likely to make a big move. All right, we're going to make a big move soon. And then it doesn't. Right? But guess what, guys? This is what the market does. It just gets you exhausted. It gets you tired. It gets you to the point where you've had enough. And after all that time of weeding out the weak, the impatient, and all that sort of stuff, guess what happens? Bam! Then suddenly, after all that time, People get frustrated. People get cranky. People, oh my goodness, why am I in the damn metals and miners when I could be in the stock market that's gone through the roof? Or I could be in the crypto market. And we start to do that, right? Guys, this is what the market does. It just goes, does nothing, does nothing, does nothing, does nothing. And in this case, it's done nothing for pretty much over 12 months now. But guess what, guys? There's going to come a point in time where that nothing has capitulated the weak hand, the emotional, the impatient at the window. And then guess what? Then the market's going to start to go for a really big move again. And then we're going to start to see fireworks again. I don't know when that's going to be. Technically, I can see that if we start to break out to the upside of this triangle pattern, then we're probably going to start to see that. So that's what I'm seeing through there, guys, and a bit of a overall fundamental analysis or overall analysis of what that. Fundamentally, yes, inflation's up, market should be going up, and all these fundamental reasons why these things it's doing, but it's not doing it. So we just need to, again, understand what the market's doing. It is weeding at the weak, the emotional, and the impatient so much. And then we're going to see, because guys, after all this time, and go back in history, right? Go back in history. If I go to my weekly charts, what happens when we spend a long time doing nothing? We inevitably get what? A very nice move after that, inevitably nothing going on for quite some time. What's been going on now? Nothing for quite some time. So maybe this week, next month, maybe even the start of next year. Who knows? But inevitably, guess what's going to happen? It's going to start to break. We're going to start to break out, and that break's going to start a big move up. A big move up again. I do believe it's going to be up. But that's what's happening right now with gold. So the market is a transformation of the emotional to the non-emotional, and a transformation of those who are impatient to those who are patient. And guys, this is what happened with Bitcoin. And this is, people jump on the next hottest trend, right? If I go have a look at Bitcoin, let me show you this here. So if I share look at this here. Look what Bitcoin did. 2018, 2019, 2020, 2021. Look where we started the break here. So really, look, Bitcoin really did nothing for what? 3 years. 3 years it did nothing. But then guess what happened out of nowhere? Bam! Crypto went mania, right? So that's not just that's a market understanding perspective. It's called when the market's had a lot of time doing nothing, then suddenly out of nowhere, we see these big moves come out of nowhere. And that's what I believe what's happening with the good old gold, but then also things like silver as well too. You can see silver actually had a bit of a breakdown below here, and now we've actually rallied back to the upside. So it's going to be really interesting to see, could this actually be some sort of a bear trap, right? A bear trap. We can see how we've actually had this move down. We had a bit of a flush down and we have a bit of a rally up. So is this going to be some sort of a bit of a bear trap? I do see that if I go back to my last low, you can see that it wasn't exactly a bear trap, because this major low point back here, you can see the support. You can see what happened through here. We actually just came down and then rallied back up again. So it wasn't exactly 100% of a bear trap, because it didn't really close below there. That's where it's like a very sticky situation, right? What's going on right now. So we can see that through there, guys. And if we have a look at the moving averages, overall, we are still trending down. We are still trending down through here. So it's a very risky situation right now. We're not really getting any clear setup here. The trend is your friend to the downside, and so therefore, when it comes to silver, it's really interesting that we're getting that movement on the downside. So silver's not really giving me any clear indication of what's going on here. So it's just, I'm not getting really anything too clear. All I do know is that the market is continuing down. So that's the thing we need to go with for now. And when the market starts to change, we must change with it. So let's have a look at the good old mining stocks here for a minute. And mining stocks, guys, there is nothing bullish about these mining stocks. These mining stocks have absolutely just been getting killed. High, lower high, breaking down. Look at this here, just staying below my short-term moving average, below. So we are not getting any even a bullish reversal sign in the market. And the market, this 9 moving average loves to do this, right? You can see here, look at this back here. Stayed above. When we've got to close below, we've got to pull back. got back above, stayed above, stayed above, stayed above. As soon as we got a close below, we got this really big pullback. Got above, got a close below, bit of a shake and bake. Then we got below. You can see change of momentum, and then change of momentum too on the downside. So when we're looking at short-term momentum in the markets, these short-term swings, I love to use the 9 because it gives me a bit of a gauge. Okay, what's really going on here? So let's have a look at the SIL, and same thing as well too, guys. We had a very strong breakdown, bit of a breakaway gap, and now we just continue down. So there's a lot of weakness in these metals. Now again, guys, I'm totally surprised by this weakness. I'm like, what's going on here? I'm totally surprised by this weakness here. But that's where we have to just continue to throw. Our thoughts is always wrong. The market is always right. And now let's go look at the SIL, the SILJ, and same thing as well too, guys. We're getting a bit of a pullback through here in these markets. So guys, the interesting thing is that I really want to stress home before I finish up here. And again, guys, if you like this sort of stuff, if you need me to, if you're struggling in the market right now, you're struggling in trading right now, I'm going to be giving out the first 50 people a custom trading plan. Very first thing in the description. Go book that right now, and I look forward to speaking to you on the phone real soon to build out your custom trading plan for you. So the thing that I really want to stress to you is that I don't want you to limit yourself to where you are in your moment right now. Okay, I know sometimes we can go through a very hard period, a very tough time in our life. And we go through these cycles where just nothing seems to be working out. That's the time that the universe really stresses us. You know what I mean? Like, I remember when I first started trading, guys. My very first 3-4 years, I lost $250,000. Most of that wasn't my money. I borrowed that money. Now I'm actually quite surprised that I borrowed that much money at that age, right? But the thing is that at that time, I almost gave up. I almost gave up. After 4 years, I'm just like, a father-in-law telling me that this is not for you, and you shouldn't be trading the markets, and who do you think you are? This is for the big boys out there, and all this sort of stuff, right? And then suddenly at the exact same time, having my son coming along the way as well too, my very first son, I realized I needed to get something sorted, and I didn't realize that I was so close to getting that switch, right? And again, on the call with your trading plan, I'm going to talk about that switch for you. But the switch for me was going to get coaching from someone, and him basically helping me, setting me up with a plan to move forward. Now the plan was the easy part. The hard part was following it, right? But when I started to follow what my coach was telling me, things started to slowly shift for me. And I went from 3-4 years of just banging my head, pulling my hair out so much in the markets that I just wanted to quit. I'm just like, man, I'm trying all this stuff here, and I just don't seem to be getting it. Like, what's going on here? I want to make money from this thing. And I just couldn't get it, right? And I almost gave up. I'm just like, oh man, this is not for me. This is just not for me. Like, I am just spinning my wheels right now. Maybe, who do I think I am anyway to make $1 million a year from these markets? Who do I think I am to make $10 million a year from these markets? Like, who do I think I am, right? I'm a guy that barely finished school. I can't even read or write right now. This is what was happening back then. But it was interesting that having just that almost giving up, but just continuing to try to strive for that vision, and having that one person come in and say, okay, you know what? You're doing all this sort of stuff, but let's actually bring it down to a simple plan. And again, on the phone, I'll talk to you about that. But let's actually bring it down to a very simple plan of where you are right now, what you're doing right now, and the things you must start to do to move forward. And that's where my coach actually really helped me. He said, John, if you actually want to do well from this thing called trading, then you must follow what I'm telling you right now. If you don't, you're going to continue getting what you're getting. And that was actually a very big shift for me in the marketplace. And again, guys, I'm going to do the exact same thing for you guys for the very first 50 people as a way of saying thank you for being my subscriber. and celebrating over 30,000 subscribers, which is just guys, I don't think you realize when you start something, like I started with 1 subscriber, then 4 subscribers, then 100 subscribers, and 1,000 subscribers, and then 10,000 and 20,000. Now I'm at 30,000 subscribers, you know, and I'm not the guy, like I don't know how to produce viral videos. I just do my thing, and then some people show up, some people leave, and it's all good from there. So anyway, guys, that's it for me right now. I hope you enjoyed this here. Leave a comment below and let me know what you think about the mining sector. What do you think is happening with gold? Do you think gold's about to just crack it on the floor? Or do you think it's about time we actually see a big movement? Or what do you actually think there? Or even when it comes to the stock market, right? The overall big movement on the stock market. Leave a comment below. Let me know what you think below right now, guys. And once again, make sure you go for the very first 50 people, get me building your own custom trading plan. Very first link in the description. Go over there right now. Complete the form. Book your time, and you and I will get it on, and I'll actually help you start to have that breakthrough in your trading.